Hi, my name's Adam. Welcome to the channel. Thanks for joining us today. Today we're going to be talking about the advantages of a separately managed account. Now, what is a separately managed account? So Chris Richard from BCV will talk about that in a minute, but a separately managed account is where you have a portfolio manager, a professional. You've hired a portfolio manager to buy individual stocks specifically for you, for your risk mandate, for your investment criteria, all of that. So, we partner with investment firms here at Parallel Wealth. We refer clients to these investment firms, and they all build SMA accounts, so separately managed accounts for our clients. So they're it's more of a white glove service. You can, exclude certain stocks, include certain stocks. The investment firm will always have kind of their investment mandate, and that's why we refer to them. BCVs is buying blue chip dividend paying companies that have a history of increasing dividends. We love that mandate, but let's say you want to invest with them, but you don't want to own pipelines. They can exclude that. So there's a bunch of benefits, transparency, lower cost of fees, a bunch of that. So we're going to run through all of those benefits in this video. Now, if you're sitting there watching this saying, but I'm in mutual funds at my financial institution, I'm paying a high fee, I'm not getting any of this. That's probably the case, and that's why firms like BCV have really accelerated over the last, say, 5, 10, 15 years. They're getting a lot of traction because people are tired of paying high fees, not knowing what they own. Just very little customization. So if you find yourself not checking off a lot of the boxes that we talk about, that Chris talks about today, reach out to us. So info@parallelwealth.com. We'll also put a link below. Happy to jump on a call with you, set up a call with Chris at BCV and see if they're a better option for you. Again, we're not doing these videos to sell BCV, but we do think that they're a great option. I personally invest with BCV and they've done phenomenally well for me. They're a great fit for people that are looking for kind of a dividend portfolio that has a consistent cash flow to them. So I'll quickly introduce Chris and then we'll jump into the video. Chris Richard is a portfolio manager that works for BCV Asset Management, Inc., a registered portfolio manager, investment fund manager, and exempt market dealer that is independent from Parallel Wealth Financial Group, Inc., but works with referring advisors, much like myself, to provide discretionary portfolio management services to our mutual clients. So Chris, just go through kind of a separately managed account. What is it, and what are the advantages of a separately managed account? Because a lot of our viewers won't kind of know that term, what it means, and the advantages of it. So let's go through that.
Sure. So a separately managed account is an account that is managed specifically for a specific client, where we buy the individual securities within an account for that client, right? So instead of seeing a mutual fund of a Canadian dividend company, you will own the shares of certain businesses that we find attractive. So we buy the individual shares in your name. Tons of advantages of a separately managed account. First one, transparency. You get to see what you hold, right? And for some clients, they love this. Other clients, they say, I don't know what these businesses are. I don't care. But we find that for the most part, clients like knowing what they hold, right? You can kind of see individual holdings, what you hold, and really kind of drill down onto individual performance on kind of what we buy for clients. Second, individual reporting, right? So for the SMA, which is a separately managed account, every quarter for BCV, we provide performance. How do we do? How did relevant benchmarks go specifically for your account, right? It's not for the pool, it's not for the mutual fund, but specifically for that investor, right? Mm-hmm. So we want to, that's really, we find beneficial for clients to kind of see, am I on track, right? Are these performances kind of what I should expect? Tax efficiency is probably one of the most, once you have non-registered money, it seems to be one of the more higher benefits of holding a separately managed account, right? It gives you that flexibility. Perhaps you want to at tax time, sell something to offset a gain. Well, within a pool, you can't really do that, right? You kind of are along for the ride with everybody. And at the end of the year, you get your tax slips and you have to pick up a proportional share of income, gains. And sometimes you say, well, I didn't sell anything, right? I still hold the same number of units. And once you have a non-registered or a cash account, taxation becomes a more and more important function, within retirement and for planning, right? So having a tax efficient portfolio makes tons of sense, right? Mm-hmm. Also, we're able to hold investments in accounts where it somewhat makes sense, where we can hold dividend growth companies from Canada where you get the dividend tax credit, more beneficial than, say, holding a fixed income product in a non-registered account, right? So we have that conversation and saying like, where can we structure this portfolio to be the most tax efficient as possible? Customization, this is the benefit. A lot of clients like this, and more. I have more conversations about ESG now, about environmental, social, and governance of the firms that we hold, probably than I ever have in my life. Some clients say, you know what, Chris, I love what you do, right? But I don't want to be holding, this business at the expense of for me to get rich. I don't want to hold, pick what you don't like. For some people, it's military, tobacco, fossil fuels. And what we say is fine, right? We don't have to include that within your portfolio. Every client that we have has their own individual investment policy statement that governs their portfolio. And we just mark on there, client would not like to be invested in tobacco stocks. And we don't do that, right? We would just exclude it from our portfolio. Currently, as we're chatting here, we don't have any, but we want to make sure that we're building this portfolio customized for this individual investor, right? And if that client does not want to have that, client does not have to have it. The difference, if you're saying an ETF, mutual fund, you get what everybody else gets, right? You get the basket. And if that happens to be in the basket, you get it. So that's the benefit of having an individual account built specifically for that investor. That kind of leads into that flexibility, right? Is we want to make sure that we have the ability to customize the portfolio also, not only in what we hold, but perhaps also in, does it make sense for the client to have, do they need fixed income within certain accounts, right? Do they need to have certainty in cash flow because they're going to have a large expense coming up in a couple of years? So we have that flexibility as well. Mm-hmm. Service and management focus, I believe that's a BCV function, right? We're really good at making sure that our investors, we communicate with them, right? And we want to make sure that they're knowledgeable about what they hold within their portfolio. And having all the characteristics of a separately managed account, we find it's really, has a great conversation starter and continuing conversation with clients. So those would be the main advantages, I would say, of a separately managed account.
Yeah, perfect. No, that's great, because a lot of people don't understand that that's even an option. So for a lot of you watching this video, if you're tired of being in an ETF where you're buying the whole market, or a mutual fund where you can't have that controller, the tax efficiency is a huge part of that. And so when we put financial plans together for people, when we see a non-registered account, we ran into this not too long ago, and we went back and forth with you, Chris, on this. It was at kind of an online digital investment firm, and the non-registered account was just not invested correctly. Like, it wasn't invested tax efficient at all, and a lot of it was they couldn't really. So moving to a separately managed account can create a ton of tax efficiency. Again, a lot of our clients that we've referred to you, Chris, they've said, we don't want pipelines, or, they've omitted something from their portfolio for their own personal reason, and that's fine, right? So you just get, I always tell people, you get more of a white glove service, right? Versus buying a mutual fund or investing through the bank or whatever it is. It's a more personalized service. It's a higher level of service. And we like to call it a white glove service. We think it really is a white glove service that you guys provide. And I think highlighting kind of the SMA model, the separately managed account model, it really defines what you guys do well, and what separates, your firm from how most Canadians invest. And again, we're not taught this in school or along the way, and the banks are definitely not teaching this because it goes against what they do. So it's good to kind of get this information out there to people, so people understand, like, most people fall into mutual funds. Some might be in, direct investing or DIY. And then there's a separately managed account model, which is, it's kind of like the DIY model, but with professional money management and better tax efficiency. So, we think it's a great solution for anyone out there. So again, if you have more questions about BCV, what they do, questions for Chris, contact us, info@parallelwealth.com, and we'll get you connected with Chris, and maybe get on a call or email chat with him and find out more about their firm. So thanks for joining us today in this video.